As the NSE All Share Index is trading slightly lower, or rather slightly higher in early trade. I'm joined now by Abiodun Keripe, the head of research at Elixir Investment Partners, to review Nigeria's equities market in the first trading day of this quarter. Thank you so much, Abiodun, for joining us. So this quarter hopefully will be better than the last. It was down 6.25% in the Q1, but let's start with that and just your thoughts about, especially the numbers that we've seen. We've seen a flurry of results come out over the last 2 trading days. Your take on how the market is reacting to this?
Thank you, Wale. So far, I think market's reaction to the results we are seeing have not been too way out of the box, in my own opinion. The results on average, if you look at it in terms of dividends, on average for the top banks, you're seeing a little bit above 6% dividend yield. Which is
you'll expect that they should rally with those type of payouts, don't you?
Yes, but the fact is there are other variables that's weighing down the market, which is why I said the reaction from the market so far, it's not out of the box for me. I think it's just a normal reaction. It's really not capturing that the market is seeing a better number, not better in a strong sense, but relatively better number against the backdrop of what we've seen in 2013, the tighter interest rate environment, tighter regulatory environment, largely for the banking sector and also even for the consumer goods. Really, we've seen a slowdown in terms of demand from consumer. We've seen a slowdown in terms of demand. If you look into what's been happening up north, you understand what I'm saying better. So really this weighing down the market in a way, but largely investors, I would say the investors who are out to bargain on really are in the market and are picking slowly. And if you look at it again, in terms of the sectors that are moving the market, so it's majorly skewed towards the heavyweights. Largely, you see the Danksem, you see Nestle, you see recently the banking sector, guaranteed Zenith Bank, also are joining the queue.
What are your expectations for this quarter? We're kicking off today, of course. I think a lot of people are still very cautious. We've seen a lot of people wait on the sidelines over the last 1 month. So your take on how the market is likely to trade this quarter? Okay,
this quarter now, I would be a little bit I'll be in the neutral to the positive, so my outlook would be neutral to positive. Basically, ask me why. We've seen the MPC meeting come and gone, and luckily for the market, there's been no shocking decision, no shocking news really. So I think on this backdrop, investors will begin to want to look into the market again. That the meeting is come. It's been so much said about that they could just come up with any shocking policy, and that's come. No shocking policy. So I think investors will look back into the market, and for the rest of Q2 as it is, I expect investors to come back into the market to pick up. Bargain hunters basically should take over the
Q1 numbers be key for you, especially for the banks?
Yes.
We've seen in fourth quarters, we've seen quite a diversity of problems. Some banks, I think there was an increase in NPL formation. We know, of course, the cost of funds has been a challenge for others. Your expectations for Q1 and why that would be key for the market going forward?
For the banks, really, even the recent 15% CR on private sector deposit basically would have a little bit of impact on their numbers, you understand? And to add to the fact that cost of funds are looking a little bit elevated from what we had in 2013, add to the fact of that is that I've not really seen so much aggression in terms of risk asset creation so far, if you look back into the last 3 months. So these numbers these variables clearly would impact on the bank's performance in Q1, which will be some of the numbers they'll be churning out in Q2, and which fits back into my initial outlook, that's a neutral to positive position. So if these numbers are coming in for Q1, then they're not looking very strong. So you're going to see investors would want to switch back into this sideline and maybe do a sit-down look approach.
What's your take on the insurance space? Is insurance something attractive at all? We saw numbers from Mansard, very positive numbers. Although many will argue that that is clearly one of the market leaders.
Yeah, we've been saying this over and over again. The insurance space, really, from a global perspective, insurance sector should be a leading sector in terms of economy, how it contributes to the economy, how it drives the overall economy. The sector should be key. But because of this side of the world where we operate, the demand for insurance products is not so strong. Now there's been a shift in terms of regulation, so the NICOM and all is coming on board to come up with
you're not aggressive
policies.
about that sector?
No, I'm not pretty aggressive about them, really. I expect the sector leaders will continue to lead, so the likes of Mansard, the likes of Custody Insurance, will continue to lead in terms of numbers and performance, but the laggards will just remain where they are, because
Abiodun, let's leave it there. Thank you for joining.